Any other things we want to add to the agenda?
We've got one, just more people to invite. We've been meeting a lot of the banks and institutions. So one of the ones that was interested was SWIFT. So if we like to discuss new people joining as one of the items.
Quant written into code is basically there with SWIFT. Yes, it's actually written into code. I'll show you some receipts in that regard to back up this hypothesis that basically speaking, SWIFT chooses Quant over all else for banking. This is a new update. Yes, we've been there and done that when it comes to Chainlink and SWIFT. Been there and done that when it comes to XRP and SWIFT. Have a small example in regard to Stellar and SWIFT. Let's jump into all this material and why it matters to you. Because at the end of the day, Quant, all the banks, yeah, all the banks. Stick around to the end of the outline. You'll be glad that you did. Consider smashing that like if you haven't done so already. Again, let's just get right into it. So first thing that's going to come up on your screen is this. A lot of other people share this. This is not me just rehashing what has been shared yesterday, but nonetheless, I want to reference it before we get more into the material and why it makes sense. So for one, last month, the ECB announced that Quant, alongside almost 70 market participants, including merchants, fintech companies, startups, banks, and other payment service providers, has been selected to work on the European Central Bank's digital euro project as a pioneer partner. Now, this part about ECB, try to remember that. If you're take notes, remember that. So again, I retweeted this earlier, but we will play a key role. Again, key role, they as in Quant, in helping the ECB to develop a secure, trusted, and private digital euro with the programmability and efficiency of modern digital payments.
If managing your crypto feels like solving a puzzle, it's time to switch to Decent Wallet. So just a few taps, you can manage, track, and secure your crypto with unmatched ease. And here's the best part. Grab your Decent Wallet at a discounted price by using the referral link below. Don't miss out on making your crypto experience smoother and more secure.
Literally, they posted that the other day, June 12th. Now, here's what's important. And when I say we, well, shout out to Quant Papa. He pointed this out on Discord, and he mentioned specifically the tokenized GBP. Great Britain pound is what I believe it's abbreviated. Some of you guys might say it means something else, but whatever the case be, April 29th, tokenized GBP at the Chief Commoners Parlor, Innovate Finance has hosted a forward-looking event on the 29th of April during the FinTech Week at the Chief Commoners Parlor, Guildhall. It was exciting to see a momentum growing around, of course, stablecoins. And look what it mentions here, everybody. Stablecoins, right? You have to keep in mind. It mentions, for example, with major TradeFi players like Stripe, Revolut, which holds 25,000 plus QNT, and even PayPal. And we know about the whole thing recently with PayPal and, of course, Stellar. And I'll show you a little bit about that just in case you didn't know. Great to hear insights from big crypto leaders. Coinbase, Circle, you get the gist. But when they go further down into this, tokenized GBP is the first FCA registered company issuing a GBP stablecoin. Huge milestone for the UK. Was Quant part of this? Now think about this. Some people feel as though that is Gilbert Verdian right at the front of that table, back of the table. Some people say, nah, that's just a guy with a head that looks like Gilbert Verdian. I haven't had 100% confirmation on that, but for me, that sure looks like the profile of Gilbert Verdian. Again, could be wrong. Might be his doppelganger, but that's very interesting to say the least, okay? So, nonetheless, tokenized GBP, okay? Let's take you further into this. Danelle Dixon reposted this. We've been talking about stablecoins since before they were even called stablecoins. So we've been prepared for this. Stablecoins like PayPal's PYUSD have massive potential to bring people and businesses on chain. And the Stellar Network has the right infrastructure to meet the moment. Bring on stablecoin summer. We'll do more of a deeper dive into this. And shout out to Wade over at his particular channel, Digital Hustle, right? He is going to do more of a expanded deep dive, and I'm looking forward to seeing that. But I too am going to do an expanded deep dive about this, and I think there's something big there that was enrooted a long time ago. And I'm thinking with Jed McCaleb, but that's an outline for another day. So get further into this, shout out to Quant Papa once again, because it's the findings. 6 days ago, UCL Center for Blockchain Tech states, we are pleased to share that Paulina L., alumni over at UCL Emerging Digital Technologies Program, has her paper accepted as a full paper at the 4th Cross-Chain Workshop at the 2025 IEEE International Conference on Blockchain and Cryptocurrency. Hey, guess what, everybody? Who recently did an outline about this? Myself, Shani, and Jesse. Give those brothers a follow. Because guess what? We pointed out some of these things in regard to the patents and, of course, the significance of IEEE and how it all comes together. This is also aging well. Why does it matter to you, though? Well, like it says here, developed from her dissertation project as part of UCL Computer Science Industry Exchange Network, which is IXN program, her paper, quote, adapting the secure asset transfer protocol for secure cross-network asset exchange, addresses a key challenge in distributed ledger technology ecosystem. And of course, like it says, interoperability between independent DLT networks and legacy systems. That's important. All right, look what it also says. SATP to support cross-network asset exchange and general purpose system agnostic framework. What would be that system agnostic framework? Yeah, the overledger, because that's asset agnostic. That's blockchain agnostic. Full paper is basically here, but before we get into that full paper, they wish her the best, and like it says, congratulations to all co-authors. Does it mention Quant? It does. Keel Eric Marstein, which it is somewhat of a deep dive on him, and of course, Dr. Luke Riley. That's important. That's big time important. And they all met, talked about this thing. But when they talk about this thing, what do you see in the top right corner? Again, sometimes you got to really look deep into stuff. You see in the top right, SATP. And what do you see literally on the top right? It is what, everybody? The Quant Network logo. People said that SATP has nothing to do with Quant. You never did your proper research. And I mean, no offense to that, but that's the reality of it all. And like you see here, why would they even bother sharing some of these key things? Again, even on the page, maybe it has something to do with gateways, networks, originators, beneficiaries, so on and so forth. Again, orchestrated by 2 gateway applications. Just in case you don't see it, look what it says. 2 gateway applications. That's important because when we talk about a shared unified ledger, internet trust, internet value, as Jesse has pointed out. Let's take you to this next part on why it matters to you. Again, shout out to Quant Papa in the finding from techrxiv.org. It's adapting the secure asset transfer protocol for secure cross-network asset exchange. Highlights, of course, are interoperability. Why am I presenting this to you? Well, it's the full paper, but I'm just going to get right to the gist of it. It mentions the whole thing of distributed ledger technology landscape comprises a wide range of independent networks with little to none built-in interoperability. The next part, interoperability, is mentioned here. Mentioned specifically Martin Hargreaves, obviously the Quant Network. Hargreaves has cited literally this year about describing interoperability protocol that can facilitate asset transfer between 2 DLT systems as well as between DLT system and a non-DLT system. In either case, SATP imposes no restrictions on the underlying system implementations. Think about that. It builds on its work. In this paper specifically, they present an adaptation of SATP that facilitates cross-network asset exchanges. This asset exchange protocol is named the Secure Asset Exchange Protocol and inherits the key advantages of SATP, but enables asset exchanges instead of asset transfers. Now, that's pretty technical, and maybe that flies past your head. Keep in mind, it's the preprint timeline and basically happened from May 5th to, of course, the 9th. That's also a big deal. Next part I want to share with you guys is this. Take you over to this. Shout again to Quant Papa for the screenshot. It's this question. Who will control digital money infrastructure? Well, some of you guys feel as though you already have the answer to that. But it says the existing infrastructure is the product of telecommunication rather than the digital technology. It goes on to also mention that there's things that necessitate the updating of ledgers on proprietary systems via data exchanges between counterparts and their agents across messaging utilities such as SWIFT, and of course settlement via centralized utilities such as the ACH, Automated Clearinghouse, RTGS, real-time gross settlements, and of course the CLS. They're common platforms such as the Regulated Liability Network or Partial. And of course, where do we go from here? Well, there was tickets to this particular event, but where the case be, you're going to see how this aged extremely well. Because in the update, you see here posted a few days ago, June 11th, Quant Network shares this. On Monday, June 16th, coming up here soon, our head of partnerships, Goncalo Lima, will be joining a panel titled Who Will Control the Digital Money Infrastructure at this year's Future of Finance Digital Money event. The event will bring together banking and payments professionals. All right, what about all the banks? Think about that. From across the industry to answer this question, is it game over for fiat currency finance? My goodness, that's a bold statement. And of course, register for the event, etc., etc. Is this where the event costs $99, or I should say 99 pounds? I think so. And like you see, this guy is part of partnerships, head of partnerships over at Quant Network. Take to this next part. Here's what's important. What's important is recognizing June 11th, Future of Finance, who's headed by Dominic Hobson. Some of you guys follow him over on YouTube. Posts this again, June 11th. Looking forward to having you join us. Now, why point this out? You may wonder. Well, if you're a quant researcher, you know why. This is the first time in a very long time that Future of Finance has posted or reposted anything dating back all the way to 2023. That is very, very significant because, again, why all of a sudden now? Why post now? SWIFT behind the 8-ball on blockchain, Gilbert Verdian, CEO and founder at Quant. Like, why would he be answering that question? Well, think about it. And of course, that event happened a long time ago, July 6, 2023, but it still matters even now. Why is that? Well, let's pull up more info about this. Shout out to Quant Papa for more of the highlights. It says, we welcome SWIFT's newfound focus on interoperability, according to Financial IT Innovations of FinTech. Over Ledger, our platform that solved interoperability back in 2018, we built, of course, institutional-grade solutions. We also established, of course, the standard ISO TC 307, and, of course, the whole thing of what you see with SATP and the IETF. It's always been there. Watch this. Andrew Carrier, right, back in June 9th of 2023, point out, and by the way, he used to work at SWIFT, right? And again, we also know that you have a key player over at XDC that worked with SWIFT, which is Andre Casterman. But he, as an Andrew Carrier, states, while SWIFT explores, Quant Network has solved it, the foundation for blockchain economy. Again, June 9th, 2023. Again, trying to connect all the dots. Now, here's a private conversation. I know it sounds weird. I don't know how Quant Papa gets some of this. Some of you guys feel as though I get some of this. It is what it is. We're not violating anything. You know, it's like Star Wars on Solo characters. Nothing to see here. How's it going, right? Anyway, Gilbert Verdian, June 28, 2020, on a private conversation on apparently like a Telegram, says our goal is growing the network. I don't know of any network in the world that starts with billions and billions of transactions from day one. Faster Payments in the UK launched in 2008. In 2020, it does £4 trillion in payments annually. It has taken 12 years to achieve that. TCH, which is the clearinghouse, by the way, in the US launched 2 years ago, which I worked on while at VocaLink. They want to connect 14,000 US banks to the network for real-time payments. On day one, you didn't get all 14,000 banks connected. They come to the network as it grows and adoption happens. Think about that statement. That is profound, is it not? All right, a little bit more about this. Here's the next part of this. Nick, which by the way is Nick Kerrigan, states, the clearinghouse, do we partner with them? And of course, Gilbert Verdian responds, no, I worked on the clearinghouse, implementing the US payment infrastructure when I was the CISO of Volcalink. It's like, come on, man. Did I stutter? No, he didn't. But again, Nick Kerrigan. Now, some of you guys are like, nah, I just say it's Nick. It's not Nick Kerrigan of SWIFT. I hear you. We'll get to that part here in a minute. But why is the clearinghouse so important? Even on the basic search, you see here that the clearinghouse, TCH, is not just extremely or just important, it's extremely important to the United States financial system. Some of you guys feel as though that Gilbert Vernon has no plug to the U.S., has no plug with the Quant network to the U.S. People haven't done the research. So again, this serves as a critical intermediary for processing vast number of financial transactions. Vast number of financial transactions. Doesn't SWIFT already do that when it comes to that? So you understand the role. So Gilbert's role is something like this. To me, that's even bigger than obviously SWIFT. So again, contributing to market stability. Look at the bottom part here. Clearinghouse provides a place to foster industry collaboration development where industry coordination is necessary. Well, what do we see going on right now? The collaboration with what? British pounds, digital euro, European Central Bank, all these market participants, all the banks. A little bit more about this. Let's take you to why this part matters as well. Remember how Andrew Carrier mentioned the whole thing while SWIFT explodes, Quant Network has solved this? Again, some of these things just fly under the radar. Who responded to Andrew Carrier when he mentioned Quant Network and, of course, SWIFT? Nick Kerrigan. He just dropped an emoji. Like, looking at that, right? Yeah, he's looking at it because guess what? Like you saw in the intro, Gilbert Vernon says literally working with what? SWIFT. Take you further into this. Here's another example. Nick Kerrigan. This is recent. We won, he says. SWIFT was delighted to receive the Central Banking Partner Initiative of the Year award tonight. Great recognition for collaboration, innovation on digital currency interoperability. Interoperability, everybody. How long ago did he post that? Oh, no big deal. Just June 11th. Just like literally the other day. This is just a big coincidence, Maximus. Okay. How about this, everybody? Nick Kerrigan reposted this as well from the Bank for International Settlements. Project Meridian FX from the BIS Innovation Hub, plus Bank of England, Quant Connector, Banque de France, the oversight for the BIS, Banca Italia, we know about, for example, Algorand, Bundesbank, and even the European Central Bank proves that wholesale payment infrastructures can be interoperable via new technologies. Who stands at the forefront for some of that wholesale CBDCs? Quant Network. How long ago was that posted? End of April. Not as recent as the other one. Well, what else do we have for Nick Kerrigan? Digital Monetary Institute. OMFI FDMI. I pointed them out before, especially when it comes to Stellar. And this one's posted May 21st. Again, not that long ago. How are smart contracts, blockchain tech reshaping fund management and operations in tokenized markets? Experts at OMFIF Digital Money Summit 2025 are currently examining the topic. Speakers, of course, include SWIFT Community, Euroclear Group, Stellar, and AG Insight. That's important to point out some of these key things. All right. Next part I want to jump into is this. Here's the proof of the code. Shout out to Quant Papa for some of the key findings. And I'll zoom in a little bit more about this. So look what it says here. TradeLens Network, EU supply chain. Okay. And it mentions here examples. Specifies a resource held on the underlying network. This field must be meaningful to the network in question, but is otherwise an arbitrary string. The underlying object it points to may be a network address, data block, transaction ID, alias, etc., or a future object type not yet defined. And you see an example, quant/api.gateway1.com/Swift. Boil it, mash it, stick it in a stew. Take this next part. We're almost done. And what do you see here? Well, again, this is from the original source. And some of you guys don't want just, for example, a screenshot. Go to datatracker.ietf.org. It's all there. Martin Hargraves, Quant Network, Thomas Arjano, you saw in the video, MIT. Again, Secure Asset Transfer Protocol, the particular draft. They've been working together for the longest time. Why is IETF so important? They literally did what, everybody? They were the architects, the pioneers of the internet. That's a major deal moving forward since the 1980s. All right, we're going to play this. Here's a SWIFT update. Some of you guys want to see that there's some banks. Who is in the community of these banks? What are they saying in regard to specifically the migration, if you will? Because when we get into it, again, CBPR plus release in November 2026. And what are they talking about in regard to the whole thing of coexistence, end of coexistence, and the commitment to November 2025 for ISO 222. So we're going to go ahead and play this one, which is Scotiabank, how Scotiabank have embraced ISO 222, improve efficiency. Think about that. And then, of course, draw your own conclusion. We're going to play that, and then we're going to jump right back.
By ensuring that the ISO enablement is within the foundation of our systems, it allows our global channels to connect and take advantage of all of the rich data that ISO is going to bring and provide. Through all of that transition and through all of that transformation, we're ensuring that not just our systems and our technology is upgraded, but that our operational processes are upgraded as well. We're doing very rigorous testing and validation and training of our staff across our footprint to ensure that we're best positioned to deliver ISO-rich data standards to our clients. Client feedback is very important in how we develop our solutions, and we create our roadmap. Through client focus groups, we call them client advisory boards. We hear a lot from our treasurers, both our corporate treasurers and our commercial treasurer clients, that reconciliation is a pain point, operational efficiencies are a pain point. And so when we look at that and we look at what ISO enablement can help to bring them, we're working with our clients and with our solutions roadmap to see how we can use ISO-rich data standards to make reconciliation easier, quicker cash application, just to simplify our clients' journey and make it more efficient for them to do business. When using ISO-based invoicing processes, our clients are able to more quickly apply cash. So because of the ability to have better reconciliation, they're able to see, the payor and the payee, which it also improves operational efficiencies, reducing FTE needs. They're also seeing the benefit of greater compliance. Because of the ISO-rich data enablement, we're able to have fewer false positives when going through sanctions screening processes. I think it's going to simplify how we communicate with each other and really benefit our client base to ensure that they're able to just take advantage of the operational efficiencies, better cash application, better reconciliation. It's a very exciting time. Richness and that partnership between the financial industry will help to ensure a smooth transition from old standards to new standards. As I'd mentioned previously, working with our clients, having clients at the center of what we're trying to develop also will help to ensure that as we hit the ground running, the industry and our client base is also ready to take the best advantage of what ISO standards are going to enable. Interoperability of systems is going to be key to having the successful future of ISO-enabled payment standards.
And like it says, upgrade by November 2025. I mean, again, it's nice to see some examples other than just people talking about this. No, there's real people for some real banks that are behind this, and they're doing some things. What happens when the whole flip of the switch happens? Think about it. And with that said, let's give you the final connector of it all. And it's basically this right here. And it's referred to as Vision for Economic Growth. How did this all start? Where did it start? You're going to see how this aged really, really well. And again, shout out to Quant Papa for this particular video that he is sharing with the community. I think it's a big deal because, again, roadmap co-authored by industry experts from Lloyd's, Schroders, JP Morgan, EY, KPMG, Barclays. I mean, think about the connections of some of these ones we just mentioned to Quant Network, especially Barclays, right? And even JP Morgan. So we're going to play this as well, and this will be the final connector to wrap up the entire video. Here we go.
This roadmap presents a vision for the next decade of UK financial and professional services to unlock the full potential of the economy and create a more prosperous Britain.
This vision represents what the City of London does best, which is to convene the industry, the financial and professional services industry, to come together as a UK jewel in the crown to provide solutions to our economic challenges.
We interviewed over 300 UK-wide organisations across different sectors, sizes, geographies, to make sure that this report was widely consultative and really embedded in that full breadth of knowledge and expertise across the UK and also internationally.
It would be helpful if we could work with government to understand what the priorities for the government are, and that would then enable us to coalesce funding alongside the government.
The government, the regulators and the market need to work more closely together than they have historically done in order to solve shared challenges and present the best possible face to international investors.
What's the potential we can unlock by bringing together data in ways that really serves customers and builds new economic opportunities?
A huge theme of the report is how do we innovate effectively and responsibly, leveraging the technology, the skills, the expertise that we have to deliver, and using the data in a responsible way.
As the UK considers a range of reforms to enhance the competitiveness of its capital markets, it's also crucially important to do that in lockstep with the policies that are required to seize the opportunity to anchor the country as a leader in sustainable finance.
In the UK, the investment gap is around £110 billion. It's a significant amount of money, but with that brings new jobs, new technology, innovation, and investment.
That expertise, not just in our industry, but in our regulators and in our government, enables us to operate as leaders in thinking about how to foster international links on financial services.
If we do nothing, we'll do okay. We might even do well, probably even quite well, but that's probably the limit. If we do something and we take charge, we take responsibility, and we make sure that all of the players are working as effectively as they possibly can, then we will do something extraordinary.
It's important that industries, government, and regulators work together now to build a strong economy for the future.
This is a fascinating time in the world economy, with huge changes in data and technology, huge risks in crypto crime and economic crime. We have to have a plan.
Do me a solid if you happen to listen to the entire outline and type in this key term into the comments, and that is all the banks. And I'll know that you listened to the entire outline on behalf of myself and all that I'm networked with. Know what you have, know why you hold it. The research trumps FUD 110%. Check out this end screen card, which will take you to technically part 1 about Quant and all of the banks. You'll be glad that you listened to that, because it literally shows you a lot of those key banks, and that's a big, juicy deep dive that aged really, really well. We'll see you on the next one.